Right now, somewhere in the world, a trader is staring at a flashing red chart. Their heart is pounding. Twitter is on fire. An influencer just called it a total collapse. Their indicators are screaming in three different directions. And in that moment, they do the one thing that will cost them everything. They react. Now picture a different trader. Same chart, same red candles, same chaos. But they lean back, take a breath, and say, I've seen this before. What's the difference between those two traders? It's not intelligence, it's not a secret indicator, it's not a better trading bot. It's experience. And more specifically, it's knowing how to turn market noise into useful signal. Today, I'm going to show you exactly how that works and how you can start building that edge faster than most traders ever will. Let's get into it. Before anything else, let's define what we're actually talking about. Market noise is any short-term price movement or emotional reaction that doesn't reflect a real structural change in the market. It looks important, it feels urgent, but in the bigger picture, it means almost nothing. And in crypto, noise is constant. Think about how many times you've seen this. A sudden 4% drop triggered by a rumor that was later proven completely false. An influencer promising 100x on some low-cap coin. The coin pumps for 2 days, then dies. A breakout that looks absolutely clean on the 15-minute chart, but collapses within hours. Mass panic selling after a minor liquidation cascade, even though price never even touched a major support level. These things happen every single day. And here's the brutal truth. They are designed to trigger emotional decisions. Whether intentionally or not, the market rewards the calm and punishes the reactive. The inexperienced trader sees noise and reacts. The experienced trader sees noise and observes. That one word, observes, is where the edge lives. Now, here's something I want you to really sit with. Experienced traders are not looking at better data than you. They're not using some secret charting tool you don't have access to. The charts they look at are identical to yours. What's different is the mental framework they use to interpret what they're seeing. And that framework is built through time, through mistakes, and through deliberate, honest reflection. Let me walk you through exactly how that transformation looks across 4 key areas. Number 1, pattern recognition, not headline chasing. When a major news event drops, most traders ask, what does this mean? Should I buy or sell right now? An experienced trader asks something completely different. Is this move aligned with the higher time frame structure? Is volume actually confirming this move, or is it thin air? Is this genuine momentum, or is price just hunting liquidity? They've learned, sometimes painfully, that price moves to seek liquidity, not to follow narratives. Headlines create emotion. Price action reveals the reality. Number 2, context always wins over emotion. Let me paint you a picture. 2 traders, 1 red candle. Trader A thinks, oh no, it's crashing, I need to get out. Trader B thinks, we're sitting right on a major support zone. Funding rates are deeply negative. Volume is weak. This looks like weak hands being flushed out before a move higher. Same chart, completely different interpretation. The difference is not intelligence. The difference is context. And context only comes from having lived through similar setups before, from having journaled your trades, reviewed your mistakes, and built a mental library of market behavior. Experience literally transforms fear into analysis. Number 3, immunity to social media. Crypto Twitter, Telegram groups, YouTube thumbnails screaming, this coin will 50x. I know you've seen it, I know you've felt that pull. Here's what experience teaches you, and it's not what most people want to hear. The loudest opinions are almost always late. Strong trends don't need viral promotion. They're already moving before the crowd notices. And crowded trades, by definition, increase your risk because you're competing with everyone who entered before you. When you've lived through multiple boom and bust cycles, hype stops feeling exciting. It starts feeling predictable. Number 4, a structured framework that replaces impulsive decisions. Here's the real secret that ties everything together. Noise only affects traders who don't have a plan. When you're operating without a framework, every piece of information feels like something you need to act on. But when you have clear rules, your risk per trade, your invalidation level, your position sizing, noise becomes irrelevant because your system already accounts for uncertainty. Structure turns chaos into opportunity every single time. I want to be straight with you about something. The most important transformation in a trader's journey is not technical. You can learn chart patterns in a weekend. You can study order flow and liquidity concepts in a month. But changing the way your brain responds to uncertainty, that's the work of years, unless you're intentional about it. Think about this. Studies consistently show that around 80% of trading mistakes trace back to emotion, not lack of knowledge. Most traders already know what they should do. They just can't execute it when the pressure is real. The psychological shift looks like this. You stop trying to predict every move. You accept that uncertainty is not your enemy. It's the environment you operate in. You shift your focus from being right on individual trades to executing your process correctly over hundreds of trades. You stop measuring success by whether your last trade was profitable and start measuring it by whether you followed your plan. And here's the thing most people miss about losses. Experience doesn't eliminate losses. No amount of skill does that. What it eliminates is the emotional damage that comes from losses, the spiral, the revenge trading, the abandoning of a perfectly valid strategy after one bad week. That emotional stability, that's worth more than any indicator you'll ever find. The market you're trading in today is fundamentally different from what it was even 3 years ago. AI-driven algorithms execute strategies at speeds no human can match. Liquidity sweeps, orchestrated moves designed to trigger your stop losses before reversing, are more sophisticated and more frequent. The information environment has never been noisier. And here's the hard truth that changes everything. Raw information is no longer a competitive advantage. Everyone has the same charts, the same news, the same on-chain data. The advantage now lives entirely in interpretation, in how accurately and quickly you can separate what matters from what doesn't. The winners in this market aren't the most informed, they are the most filtered. Reaction is expensive, patience is profitable, and experience compounds just like a well-managed portfolio does. Now is the part I really want you to pay attention to, because you don't need 10 years of painful trial and error to develop this. What you need is intentional practice, a system that compresses your learning by forcing honest reflection. Here's exactly what that looks like. Step 1. Journal every trade, no exceptions. Record why you entered, what you were feeling, how you exited, and what actually happened. Over months, patterns will emerge, both in your setups and in your psychology. Step 2. Review your losing setups every single week, not to punish yourself, to understand. Was the entry valid but the timing poor? Was the setup weak from the start? Or was it actually a good trade that just didn't work out this time? These distinctions matter enormously. Step 3. Commit to 1 or 2 strategies deeply. The urge to chase every new methodology is constant in this space. Resist it. Mastery comes from depth, not breadth. Know your setups so well you can spot them instantly and execute without hesitation. Step 4. Trade less, seriously. More trades means more exposure to noise, more emotional decisions, more fees eating into your returns. Focus on high-quality setups, not constant activity. Step 5. Study past market cycles. Go back to 2017 and 2018. Study the 2020 to 2021 bull run. Understand what 2022 looked like from the inside. The patterns aren't identical, but the human psychology driving them is remarkably consistent. Consistency builds pattern recognition. Pattern recognition builds conviction. Conviction builds edge. And edge, sustained over time, builds real results. Let me leave you with this. Market noise is never going away. If anything, it's only going to get louder. More participants, more AI-generated content, more platforms competing for your attention and your emotional reaction. Volatility will always be there to test your discipline. But here's what I need you to understand. That chaos is not equally distributed in its effects. For the undisciplined, reactive trader, it's devastating. For the experienced, disciplined trader, it's opportunity, because volatility is what creates the price swings that make significant returns possible, and experience is what lets you position for those swings without getting swept away. Over time, if you stay consistent, analytical, and genuinely committed to learning from every trade, something remarkable happens. What once looked chaotic becomes structured. What once felt random becomes readable. And the market, which once felt like a force working against you, starts to feel like a system you finally understand. That's when trading stops being a gamble. That's when it becomes a skill. If this gave you clarity, do me a favor and share it with one trader who needs to hear it.